Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at MTV. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to check that out before watching this one. The link is going to be in the top right hand corner of the video. Watch that before watching this one so that you have more context. And as always, before we jump into the TA itself, I do want to mention the two donation links in the description. Feel free to support Ukraine in any way possible. Even if you don't have a lot of money to donate, obviously not all of us are able to donate $500, $200,000, even $5, something like $2 is going to be a step in the right direction. All of that is going to add up, and it is going to be helping us to win the war against the Russian tyranny. Now, with that being said, let's jump into the daily chart. So we were in the falling wedge over here, in a falling wedge, I should say, and we did bounce off of it. Then we had a move to the downside. So we lost this support trend line that we've been holding for quite some time, and we entered this yellow buy zone that I did give you anywhere from 0.00432 all the way down to 0.00327. This is basically the accumulation phase that we had over here, and we're entering it right now. So I wouldn't expect us to drop all the way down to the 0.5, which is at 0.00275, unless Bitcoin goes back to, $35,000, $32,000. I do think that we are going to be consolidating in this buy zone right now, and hopefully we can end up coming back down into the pattern, getting closer into the apex, and then breaking to the upside. That is still a potential play on our plate over here. Now, zooming out a little bit to see our long-term targets. So 20 cents is my long-term target at the end of the bull market. I do think we can come all the way up here, because after you break the first Fibonacci level here, which is the previous all-time high, you are looking at the 1.618 as your technical target, because most of the time after breaking the first level, the first Fibonacci level, you tend to go all the way up to the 1.618 before having a massive pullback. Will that be the case this time? No one knows, but Multivac is a low cap gem, so it is risky putting a lot of money in these sort of projects, but the returns are going to be crazy if the project ends up being a success. And Multivac is on its way to success, in my opinion. Their sharding technology can be very, very useful in the future of our ecosystem. Now, like I said, the 20-cent target is for the end of the bull market, and I'm not trying to tell you when the end of the bull market is going to be. I would presume closer to the end of this year. I don't know. The financial situation needs to stabilize a bit in all the around the world, basically, because if we keep getting black swan events, we keep getting bearish news regarding crypto, we may be in this consolidation reaccumulation phase for a very long time. We could still be consolidating for the next 6 months, and I don't mind that, because that gives me a lot of more time to buy my favorite coins at cheaper prices. So that's something that I'm looking forward to. Below that, we have the 1.414 at 9 cents. Below that, the 1.272 at 5 cents. So these are 3 major targets you can be targeting by the end of this bull market. We'll see. I think 20 cents is doable from where we are right now. That is a 4,000, basically a 5,000% gains. And, that's not a lot in crypto, basically. Jumping into the daily RSI right now. So as you can see, we lost this green trend line over here, this green support trend line, and we are in the oversold over here. So this is a great time to be entering Multivac, in my opinion, because once you are below the index of 30 on the relative strength index, you are oversold. And as you can see, each time you are oversold, you tend to have strong recoveries to the upside. Look at this. So yeah, this is just something to keep an eye on. I would be buying Multivac tokens right now as we're speaking. Now let's jump into the KuCoin website for more oscillators. Okay, so jumping into the daily chart over here. So I do want to show you the Stochastic Rsi, which is in the oversold as well. So this is another indicator that is telling us that buying right now is a good option. Now the MACD has a bearish cross. The yellow line is the moving average, and we got a cross below the red signal line, which indicated a confirmation of the downtrend. And since that confirmation, we did see a move to the downside, as you can see. So that was on April 6th. And since then, we have moved down quite a bit. And yeah, we've taken a look at the RSI on the previous chart. So things are pointing towards a pullback, as you can see. And I do have actually pointed towards a pullback, and we did get that pullback. And there is another little buy zone that I have for you here, anywhere from 0.0034 all the way down to 0.002, which is all the way down to this wick over here. Just a different buy zone, but you know, when it's below this range, that is going to be bearish in my opinion. So we don't really want to lose this low over here, because if you start going all the way back below this low, then you can start targeting these numbers over here that we had back at the end of March of last year. So we're getting a bit overextended from the 20 EMA on the chart. The 20 EMA is the yellow line over here. So we want to get back up to it and at least have a back test of resistance. And if you simply want to trade that, then that's a nice 25% trade. So you can take that. If you want to sell at the 55 EMA right now, that's a 54% trade, which is not bad at all. But yeah, that is pretty much it for the daily chart. Let's jump into the weekly. Okay, jumping into the weekly chart. So as you can see over here, we are getting a bearish cross on the weekly chart. Now this is negative, okay? On the weekly chart, when you get a bearish cross, that is very negative, because the higher the time frame, the more significant all the crosses and all the patterns are. So once you get a bearish cross on the weekly, this is telling me that we can potentially come even lower. And as you can see, once we had a bullish cross here back in March of last year, that triggered this, you know, we had this strong impulsive move over here. We came back down to the 55 EMA and had another strong move to the upside. Now, once the opposite happens, once we have a bearish cross, we can see some strong moves to the downside. But, you know, once there are no sellers, once all the people who wanted to sell actually sell, then the price can't physically come down any lower. So I wouldn't expect us to drop any lower than this blue buy zone over here. If we jump into the Stochastic Rsi on the weekly, you can see that we are in the oversold as well. So great buying opportunities. We're getting overextended with our MACD over here. We're below the histogram. We had a strong bearish cross over here in November of last year. So if you sold back then in November of last year, let's just see what's the upside for you. So you could have bought in 80% cheaper, basically. So that's how the MACD works. It is a lagging indicator, but it does predict the continuation of the trend very much precisely. And the weekly chart over here, as you can see, let's just compare over here. Let's just compare the RSI and the price action. So let's take a trend line over here and place it from this low to this low. So we are printing a higher low at the minute. If we go into the RSI from the same low, we're printing a lower low. So this is a hidden bullish divergence. The RSI is printing a lower low, but the price action is printing a higher low. Now this all can be invalidated if the price action starts coming all the way down here, losing this low, thus creating a lower low, and that would, that would follow the RSI that we have over here. But if we bounce off from here and have a move to the upside, right? If we don't go any lower than this, then we are still in that hidden bullish divergence. And a hidden bullish divergence basically means that there is some potential upside coming relatively soon, because as you can see, we're getting overextended from the 20 EMA on the weekly chart, as well as from the 20 EMA on the daily chart. So some upside is going to come sooner or later, and that's 102% to the 20 EMA on the weekly chart. So I do think there is going to be some upside. Obviously, it all depends on Bitcoin. If Bitcoin decides to crap the bed, the altcoins will follow soon after. So yeah, that is pretty much it. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Patreon. It's a great way to support me and a great way for you to get more exclusive content, more TA, more video requests, low cap gems, project reviews, buy and sell alerts, market sentiment analysis, and all that kind of stuff. So yeah, and the donation links down below, don't forget about those. I'm gonna catch you in the next one. Goodbye and good night.